right. Hey there. Good. I guess it's good morning, everybody. Still for a little bit longer. A few minutes after 11 a.m. Central Standard Time here on Friday, the 26th of July, 2024. Christopher Inks with Texas West Capital coming at y'all live here just north of Houston, Texas, where it seems like the rain will never end. So today we're going to talk about Bitcoin a little bit. You know, everybody's still kind of, a lot of people are still quite bearish on it. I'm going to talk with you about why that may or may not be the case you should be looking at. So is this a bull trap or not for the bears? We'll talk about that. Also going to look at some other charts, NASDAQ, S&P, Dow, the dollar, the DXY. Probably throw in Ethereum and Sol in there along the way, as well as gold and silver, and kind of get through all these charts. And the goal here is to get you to see that things may not be quite as bad in the markets as what people are trying to get you to believe for the last 3 or 4 years now. It's been a constant. It's the end of the world. It's a recession coming. It's all this for like 3-4 years. The data doesn't show that though, right? The charts definitely don't show that. We're going to take a look at that because, the problem with that is people get out there and they share all these things that they don't understand, just blindly share it, right? I mean, that's what everybody does, right? You see something in there that fits with the way you feel at the moment and you share it, right? But it's pretty bad when it comes to, to the markets, because there are things you can look at. There are ways to look at the chart to understand it better where you don't get caught up in all that. So we're going to talk about that today, but how are y'all doing, man? Hopefully y'all are staying dry. I know quite a few people are out there at the Nashville Bitcoin conference. I wasn't able to go this year. Too many conflicts, but I know the guys from Beards and Bitcoin, as you guys saw yesterday, if you watch that episode, they're out there enjoying themselves. Andrew and Tillman. Gary is, of course, out there. And just about everybody you guys probably follow online, that I talk to as well is out there. Taylor and the guys there from Investing Bros, as well as Kelly Kellum's out there. Sam Price is out there as well. So yeah, man, you guys, if you're following online, you're probably getting a lot of looks from the conference, which is cool. You can see all that. Scott Melker, I know, is out there. Also, he interviewed R.I.S.K the other day. And so there's, he's got a couple of big interviews coming as well. So a lot of information, guys. I bring this up because, man, I've been around a while. I've been around the block more than a few times, and it's crazy how much access y'all get for free through social media, through those guys as well, that are out there and doing these things. And if you can't make the event, or heaven forbid you don't want to, because God, it's a lot of people in one place. I feel you with that. You guys get access to a lot of this, understand what's going on. These guys go there and they talk about it. One of the big things that Tillman was talking about yesterday, he said one of the first things he went to over there on Industry Day yesterday was where they were talking about Bitcoin mining, and it reframed the way in which he was thinking about it. This idea that when because he was thinking AI was going to completely outstrip all the hardware for Bitcoin miners, because that's everybody's kind of excited about AI, but in that what he was looking at, they brought up the fact that AI has to be on constantly, right? So your equipment has to be going 24/7, whereas Bitcoin miners can be turned on and off. And so when you're looking at Bitcoin miners in relation to a electric grid, right, where you have a power grid, where you can come in there, and so you've got the excess power, the excess kilowatts is what you're selling. Well, all of a sudden, Bitcoin mining seems to be a great thing to bring in there, because they can come in and soak up that extra energy that you're putting out there. So, you can tell, but part of that contract is, okay, but if we get to a certain level where we need that energy, you have to shut off your miners. And they can do that. You can't do that with AI. And I know specifically here in Texas, and I bring this up a lot, because Texas has its own energy grid run by R.I.S.K, and they're a bunch of idiots anyway, but we won't go into that. But the reality of it is a lot of business is moving to Texas, especially when you look in that San Antonio to Austin area. And so you look at AI companies and stuff like that are coming in, and they it takes a lot of energy to run those things. And we're already pretty significantly up there with the energy we pull, especially when, summers, we all have our air conditioners going because it's hot as hell outside. So, it's a reality that they have to figure out, how do we start producing more energy out here and getting it, to the companies and the people that need it. While we've got more companies coming in and more people coming in, draining on what we already have. So, when you're looking at that and you're looking at Bitcoin miners to help stabilize that, because when you're running electricity, you want stable. You don't want these spikes all the time, right? And so, again, part of the role that Bitcoin miners can play in that, because they can turn the miners on and off, is to help stabilize the grid, to help stabilize that power, which makes it all work better. So there's a lot in there going in that. And, that's just the start of it. I've been telling you guys for about a year and a half now, I guess over a year and a half, since about, I guess, probably October of last year, that you should be getting into miners, right? And the big one I was talking about at the time was R.I.S.K. But, you should be in miners in general. And then as we've kind of gotten into this last few months here, we've really pushed a lot about the idea of miners kind of not switching, but adding additional revenue streams through AI and high performance compute. And now we can look at this as the real draw for the energy companies is how these Bitcoin miners can come in and help stabilize their grids, as well as, providing a place for that excess power to go, instead of just, not, right. And so it's really good, with the Bitcoin miners. I still think they're going to continue to have a lot more upside, guys. Some of you may have already joined up. I've got the Bitcoin miner stocksreport.com. That's a newsletter that I put out every week. And we go over probably, I think it's like 17 or 18 charts or something, different miners. We update them every week. News and information's in there. What's going on the last week, news and information, what's going on with the riot, what's Mara doing, all that. Speaking of Mara, if we're talking about Bitcoin, Mara's got the full hold strategy now again, right? So they're back in the whole idea of, listen, we're going to keep everything we mine and we're going to buy more. And so what they do, they just bought another $100 million worth of Bitcoin. So now they own like 1.3 billion, I guess, is what it is. And so, when you add on top of it, then you also look at the ETFs, right? So now we got ETFs. What's happened with the ETFs recently? Hell, BlackRock, IBIT, has taken in something like $1 billion in 2 days, like just earlier this week, one day after another, 420 million or something, and then 540 million or something like that the next day. And that 500, whatever it was, 40 million was like the third largest inflow day they've had so far. So, when you see these, and GBTC is those kind of letting out a little bit, but it's more or less really negligible at this point compared to the inflows. And so when you go, okay, well, Bitcoin's topped out, just what's going on doesn't support that. Without even having a look at the chart, these things that are going on right now does not really even support that. And so, if you're looking for those basically those leveraged plays on Bitcoin, you're out there, you're buying Bitcoin miners, you're buying mining companies, you're buying, what's his name? MicroStrategy. You're buying Coinbase, right? To get a leveraged return on your money there compared to Bitcoin. And you're doing these things not because it's the top, because we're just kind of getting going here, right? And, again, I know it's easy to get caught up in all the doom and gloom. The fact is, as human beings, we respond most strongly to fear. Remember, there's two main psychological drivers of human action, and they're fear and greed, okay? Fear is the biggest. I mean, greed's a big driver too, but fear is even bigger than greed. And so that's why when you look at the way that marketing and advertising is done, they're often playing to that fear, right? Fear of losing out, fear of missing out, fear of losing. It's something related to fear, because that's what you're going to respond to. That's what you respond to, generally speaking, as human beings. And so you'll also, so that comes quickly and easily. And if you're, a trader that really honestly, listen, guys, people always take offense when I say this, right? But at the end of the day, if you are not consistently making enough income from your trading so that is your source of income, right? And you're living fine, then, don't don't sit there and push a lot about how much of trading okay? And I say that because I see a lot of this going on online, right? People that don't even trade, or people that are little part-time traders, they're trying to make money. They don't make any money though. They're constantly losing money, but they're out there continuing to perpetuate all this fear out there, right? Because somebody else who they think is better than them and doing better than them is saying fearful things. So then they get on there and just kind of share it. And then you see it and then you get scared, because human nature, we're going to get scared. You share it, right? And what does that do for you? How well are people doing with the stocks in Bitcoin and whatnot over the last few years, when everybody was telling them every month that it was the end, that everything was going to crash, that, big recession was coming in, inverted yield curves, and inverted yield curves is only part of the story. When you're talking about steepeners, again, you got to look at that and you go, well, what's the whole story? What happens when that's happened? I posted a great post here. Oh, who is it? I want to get their thing right here. The name of their thing here, Capital Flow, Global Flows, at Global Flows, and the name is Capital Flows. But they put on, it says the biggest misconception right now is the steepening of the curve, which is supposed to equal a new bear market in equities. But he brings up the point: what happens when the curve is steepening and the Russell is rallying, though? And he gives you a chart to look at it. And so, again, it's not just, this is what I mean. The information that you guys are going to find out there for free are half-truths and often outright lies. And it's not because people are trying to mess with you or trying to make you lose money or anything, but it's because they don't know any better. A lot of the stuff that you guys get out there for free that seems like it makes sense is actually going to lose you money in the markets. And whether that's just information like that I just talked about, or it's information on how to understand patterns, or how to use Elliott wave, or, all these things. There's so much bad information out there. So, you have to be careful with that. You're not going to get free information online and expect to become independently wealthy with it. There's just not enough of the reality of what is in it. They don't give enough information or enough so that you understand, even if what they're telling you is truthful to that point. Again, when you talk about, inverted curves and stuff like this, but what is the rest of the story? Well, sure, that works there, but what about when this thing is also happening? Then what happens, right? I told you guys back there on again, October of last year, I guess it was, that we were looking, that you should be looking to buy that slight little dip it had at the end of October for the Russell 2000, right? RTY, the micro, the E-minis for that. And had you done that, you'd be up like 40% right now. And you go, oh, but it's only 40%. But in stocks, it's significant, right? But the bigger story here is that, as I said at that time, that was going to be the spring below the accumulation range, which means we were going out to new all-time highs. And so we're 40% up now, almost hitting the all-time high. I've got the chart here. We'll look at that in a minute. And, we've got further to go. Now, you're going to get a chance on a pullback here if you haven't gotten in to get in and ride it up. But at that time, I was talking about we're going to get that. And so we're probably looking for the rotation from like your Mag 7 and your, your larger stocks or whatever into the small caps. That's what we're getting. And so everything continues to align for further upside. I often get people, when I talk about Bitcoin rallying higher, they often say, well, but if the S&P crashes and NASDAQ crashes and Dow crashes, then the Bitcoin's going to nuke with it or going to crash with it as well. But again, when you're talking about things, first of all, the correlation that you guys want, that everybody was so excited about for a while, just really isn't there between stocks and crypto, okay? They're different markets. The correlation that you guys are, if you're looking for that, really isn't there. But in addition to that, when you're looking at going, okay, well, but if this happens, then that's going to happen. Even if the correlation was there, you're still looking at possibilities rather than probabilities. And when you're in the markets, it's imperative that you understand the difference. You're not in the market. You're not trying to trade possibilities. If you're trying to trade possibilities, you're going to lose a lot of money along the way because you're going to enter just because there's a chance. And I tell you, I warn people time and time again, you don't want to enter just because there's a chance, right? You don't want to do that. You want to enter because there's a reason, a good reason, which means usually multiple areas of confluence happening at one time that suggests you're probably more likely right than you are wrong. And if you learn to start doing that and you start doing it, then what that ends up being is you end up trading less, right? But the good thing about that is you lose a lot less money because a lot of those trades you were taking just because there was a chance lost you money. On top of that, the trades that you take tend to be better trades. They tend to more often work out, which means you're locking in profit more often if you're doing it correctly, right? So, when we look at all these things and we go, okay, well, Bitcoin top is in, it's the end of the cycle and all this, it just really doesn't make a lot of sense. So let's kind of jump in some charts here, guys. Let me see here. We can do this maybe. There we go. Let me kind of make this fit the screen a little bit better here. All right. So this is something I posted recently. And this is just a big picture understanding of what is going on here, right? So what do we have here? We have locally here, we have a bearish market structure. We have a high, we have a low, we have a lower high, and then we have a lower low. That's a bearish market structure. Here's the thing, though. If we break out above the last lower high, in this case, there's only one lower high, so it's the last one. But if we were drawing something like this, where we had a low and then a lower high, lower low, lower high, lower low, lower high, lower low, what you're looking for is just to break out above the last lower high. Like I said, that's this one in this case. What that does is that then breaks that bearish market structure. It says that bearish market structure is over. Now, it doesn't mean it can't go up a little bit here and then go and do another bearish market structure. But what it's telling you is that structure right now off this all-time high, if we break out on this chart, this is the Bitcoin all-time high index here, or all-time index. So it's 71,943 and 26 cents. If we get above that on this chart, this is no longer a bearish market structure here. So something really, significant to watch. Again, we talked about the likelihood that we were going to rally up off here. We had bullish divergence here on the daily. We had a pin bar candle print on support at the S1 pivot. I mean, everything was, again, when we talk about areas of confluence, right? What is the confluence here? Well, we've got this range going down. We've got a spring below this range, which was this candle, which is also, as I said here, is also a pin bar, large lower wick on support. Support is that S1 pivot. So that's another thing. So we got the dip down below here. That's one. Pin bar on support. That's two. We had bullish divergence into that swing low. That's three. So we've got three things right here that are coming together. That is the trade you take. That is what I mean when I say, a higher level of confidence. Don't take a trade just because there's a chance. Look at something that has multiple things that are happening, in this case, bullish things that are happening at the same time in that same area. When you can do that, it doesn't guarantee that price is going to continue, that price is going to do what you think it's going to do and going higher. But because, again, there's no guarantees in trading, right? But what it does do is it says you're a lot more likely to be right than wrong. And so your probability is increased. And that's what you're looking for. You're looking for higher probability trades. And so had you done that, you could have simply just, you could have had a target of the descending resistance here. But guess what? We got a large candle spread through it, which large-ish candle spread. I would have liked to see more volume coming through it, but nonetheless, we did get a break through it, and we didn't even pull back on the next one, right? So you could have hung in there, looked for the target up here at the pivot, breaking out through the pivot. We had a large candle spread. There's our large spike of volume. We broke through it. Man, that says, hey, we're looking up here toward the R1. So we came down, pulled back, came down. Look at this, another pin bar on that daily support. Look at us rallying up here. So again, when we're trading, we're not looking at possibilities. We're looking at probabilities, okay? We're looking at probabilities. And often when you have a range, the best thing to do is zoom out. If you're going to trade the range, I would say, don't necessarily trade the ranges. Most people are not equipped to do that because it's highly emotional, right? Because it can take many different forms, many different shapes here. And whatever your emotional bias, bullish or bearish, is going to override the shorter term that you're trading that you're trying to do. So if you've got, ranges going on there, you should probably zoom out to a larger time frame and just trade the range extremes. But this is another thing. If you actually go in and learn Wyckoff, that's why that helps so much. Now you can go in and learn Elliott Wave as well, because Elliott Wave will explain how corrections generally tend to work. So, at Texas West Capital, our group coaching, what we focus on is teaching you how and why markets move the way they do and how to understand that. And we use the tools of Elliott Wave, of Wyckoff, and of price action and volume and price action analysis. All that, we use all that to help you understand it. Because once you understand how and why markets move the way they do, what's the underlying, what's going on, and how to identify it, you can translate that, you can transfer that knowledge to any trading system, any trading style, any technique out there. And you can look at it and go, okay, so that says it's supposed to do this here, but is that likely to happen? And if it shows confluence with what you would normally expect by reading that, by what's going on, then you know that you've probably got a pretty good entry there on that. But that's what we do differently at TWC and everything else, right? We don't just teach you Elliott Wave. We don't just teach you Wyckoff. We don't just teach you price action or price and volume analysis, right? You will learn those things, but those are the tools that you're used to understand, that you use to understand what's going on with that price action there. Okay. Am I going to do the live training? Yes, Sarang, yes. I talked about it, I think it was yesterday in our Elliott Wave session. We got thrown off with that. We had the July 4th holiday that led into then the week without power. So that threw me off here. So in about a week, not this next week coming up, but the week after, we'll do it. I'll let you guys know next week what the date and times will be. We'll start with a few days a week, and we'll see if we can gradually move it up to maybe like every day as well to do that. So, yeah. Mr. Smith, what's going on? Says, do you have folks on your team that just trade one method and are good at that approach? Yeah, so we've got basically, I'm the one that teaches it right now. I'm finally looking at getting people in here to really extra coaches to bring in to just focus on one of each one. But we do have students who end up that are in our group coaching that have really excelled at one or the other, and they really prefer to just use that over the other one. And that's okay too, because again, if you're going to come in, you're going to learn how to do these things properly. So even if it is, hey, listen, I just wanted to learn how to do, say, Wyckoff, and you can get enough, just a good understanding of Elliott Wave. You don't ever have to use it, but you can get a good understanding of Elliott Wave to help you understand that there is a rhyme and a reason to the way in which price action moves, right? And it can help you understand how to forecast, even if your bread and butter is going to be Wyckoff, right? Because with Wyckoff, you can also use point and figure charting via Wyckoff to get your targets, your price targets, right? Forecasting going on there. But yeah, or you can use a little bit from what you learn with the price action to help you understand when you're looking, like, let's say, at a pullback on Elliott Wave, is it more likely or less likely to be correct? You say, well, I've got 3 different targets here, potential targets on the pullback. Which one is it most likely to do? And you can go there and look at your price action, and you can look at the candles and what's going on there, and you go, okay, it's probably this one more likely than the other two. So yeah, it behooves you to come in and learn to some extent all of it, so you get an understanding. But if your focus was really like, listen, I just want to kind of learn this one thing, you can definitely do that. But again, with the benefit that you can learn enough of the other things to really supercharge what you're doing with that. So I hope that makes sense. Crusher wants to come in with the negativity. I never understand why folks make trading courses and they are so good. Why bother? Well, let me ask you something, Crusher. Where else are you going to learn? If you don't have somebody teaching you, where are you going to learn? See, some of y'all come in here with the attitude that, oh, you think you're just going to trade and you're going to make all this money and you're just going to live life on a beach and trade at 2 hours a day and that's it. And maybe some people might want to do that. But the reality of it is a lot of people like myself, we enjoy building things, right? We enjoy building. We enjoy teaching. And it's not altruistic. I don't enjoy teaching you guys because, it makes you better and that's all there is to it. I do it because when you get better and you get back to me, you say, man, Chris, it clicked, man. Oh my God, I learned how to do it. Or like one of our students last November doubled their trading account in 1 month. And he tells me, he said, man, it's because of this, because of what you've been telling me here. We've got another student who is already their 2024 trading goals. They already hit it, a couple of weeks back, 5 months ahead of schedule. So I do it because you guys tell me that. It makes me feel good. I'm not going to lie. It makes me feel damn good. And so, why would you do it, right? Why would you do it? If you go and you're going to trade for a company, right? Whatever company you're going to trade at, they're going to put you through specific training. They're going to say, listen, this is what you need to know. This is how we approach it. This is what's going on. So, again, guys, you got to get out of the simple little mindset that, oh, if you're doing so good, why would you do it? Well, if we weren't out there doing it, you wouldn't be able to learn, right? I learned from somebody, from some bodies, multiple people, right? That's what it's about. Trade live, prove it. I've proven it. See, again, I don't have time for the nonsense, right? I've proven it for 7 years now, man. I've proven it for 7 years. I posted tons of stuff online for free. I've proven it. I've traded live with our members lots of times. So, again, the proof is there. Just because, if I had to come out here and answer every time somebody said prove it, I'd never get anything done. So anyway, I don't know. I don't get people that want to be like that. If you feel so bad about yourself that's kind of, how you are. I mean, it is what it is, but life isn't going to treat you well like that, guys. And this isn't me being hateful. This is just me being honest. It's all about mindset, whether you're doing trading or whether you're doing anything else in life. It's all about your mindset. How do you approach it? How do you approach life? How do you approach life? Because that's going to affect how well you do with anything that you're doing in life. Most people today complain. They want to be victims. And because of that, they never get to the level that they could. It's not that they can't get to it. They keep themselves from getting to it. So they are, okay? So yeah. Okay. Well, anyway. No, Crusher, I agree about holding Bitcoin. I'm a big fan of that. I tell people all the time, even if you're trading Bitcoin, you should always have a bag of Bitcoin, especially sitting on the side, that you don't touch. It's going to protect you against yourself because you're going to make bad trades out there, especially if you're not using proper risk management. Okay. So, I'm a big fan. I'm a big fan of investing as well. Yeah. I've posted many charts over the last 7 years that we've been in business, with huge returns over the years. It's what we do, right? I'm not saying no, and don't gamble. No. And if you, and that's the thing. Yeah. Don't even think of trading as gambling, guys. If you already think trading is gambling, don't do it. Trading, if done correctly, is not gambling, right? But that's why proper risk management, as I always say, is the absolute most important thing you're going to do day in and day out as a trader. You absolutely have to have proper risk management. I don't care what anybody else is teaching you about trading. It is the biggest component of whether you'll be successful or not, is your risk management. Absolutely 100%. So yeah, definitely. Mr. Smith asked a question up there. Did I already answer it? Oh, how do you gain trust with people that have been burned by gurus in the past? That's a tough thing, man. And that's something that, those, that teach others. And it's not necessarily with trading, it's with anything, right? How do you do that? And I've attempted to do that by coming out here week after week, right? So at the beginning, those of you that have been following me for years and years and years, that I used to do this twice a day, 2 hours at a time, right? 5 days a week. I would stream, right? And then, of course, I got caught in that whole crypto crackdown, and they shut my channel off in the middle of a live stream. And that's when I started. I moved to Twitch after that. And then about 4 months later, I ran into somebody who was able to help me get my YouTube account back. And since then, I've been, streaming across all these different platforms just to make sure that doesn't, in case that happens to me again, it's still out there. But, for me, it's been about going out there and giving free information. Anybody that follows me, whether it's here or on social media, like X, I give a ton of free information out there. Things to help you understand not just trading, but life better. Because again, it really is. You're not going to be viewing life one way and then able to view trading another way. However you view life. So if you have a victim mentality in life, that's going to affect the way you trade negatively. It's going to make it really difficult for you to trade. And so, a lot of what I talk about in trading and about the mental side of it, actually, if you listen to it and you do it and you focus on it, right, and you get better with that, it's going to positively affect the rest of your life as well. I will tell you day in and day out that is 100% true. But yeah, there are, I can't just, because here's the thing, I've gone out there, I've given a lot of stuff that I shouldn't have given out for free. And then people just take it, they run off with it, and that's it, and that's kind of a hard thing. But it's like, I don't know, the best way to explain it is we just go out there and we just continue to talk, and we're consistent, right? I hear all the time, constantly providing, the analysis and the charts and the explanations along the way. Again, I've got, 7 years worth of Twitter X, whatever post out there, from charts, explanations, whatnot. I had the big chart that I did for that I explained here with Bitcoin, right? When we were talking about Wyckoff and where we were looking for things to go and whatnot and why, explaining the volume and the price action and where you were looking and why, kind of like what I just did today, right? Explaining this right here. But at the end of the day, nobody can make anybody else change their mind. Okay, we are the only ones that can change our own minds, guys. So I can go out there and I can be consistent and I can give you the information and hope that in one day, you'll your defenses will come down enough that you go, you know what? Yeah, let me start thinking about it. Let me start listening to this. And then you'll convince yourself. But that's really all we can do. It is what it is, right? You got to kind of get out there. But the first thing you have to have before you get involved in learning something new is to actually believe you can do it. A lot of people try to start things and they don't really believe they can do it. And again, it all comes down to mindset, right? If you don't believe you can do it, you're not going to put in the effort. You're not going to listen like you should. You're not going to implement like you're told that you should. You're not going to follow whatever rules there are. You're going to find reasons not to along the way. And then you go, oh, it doesn't work. Well, no, it's not that it didn't work. It's just that you didn't believe that you could do it. So you didn't actually do it. You didn't do the things you needed to do along the way. And that's really one of the hardest things for people in general. Again, whether it's trading or anything else, to accept, to admit, is that they didn't do what they needed to do. And that's why, in the grand scheme of things, the really successful people are the group of really, really successful people are much smaller than the group of people who are just going through day to day, right? I mean, that's real talk, guys. That's real talk. Whether you want to believe it or not, that's real talk. And it's why people get on there and somebody says, hey, listen, this is what we're doing. This is how you do this. They go, oh, you're a scammer. Oh, you're a grifter. Oh, blah, blah, blah. Without even understanding, without even taking a moment to listen. Because in their minds, they've already made that decision up without knowing anything, right? So yeah, as Cecilia is saying there, what did she say here? Red flags are always there. People just choose to ignore. Yeah, that's a big thing. That is a big thing. Yeah, as human beings, whatever we're already feeling, we seek out and listen to information that kind of agrees with that. And we ignore information that might get, but it's the same thing the traders do, right? I can sit here and talk all day about why this is reaccumulation here, and it's going to go up. I've talked about so many times before, the volume, the price action. I've described this week after week here, right? For months now. But we still have people who are very bearish saying that this is the top of the cycle and we're coming down lower. And they're promising you that. They're ignoring these things, right? Now, they may not know it themselves, these things, right, that I talk about, But if I'm explaining it to you and you choose to ignore it, again, it's because you believe the other thing. And that's what gets traders in a lot of trouble, right? Because trading is emotion, right? What's going on here, guys? What's going on the chart right here? All this chart here? This is just a visual representation of human emotion in the aggregate, right? It's that move between fear and greed in the aggregate. That's all this is, visual representation of that. So markets are emotional by nature. Yeah. And, even though retail makes up a small portion of the markets, the portion they do make up is enough fuel to give price movement. So fuel. Now, understanding this, your larger players, your professionals, right? They understand the way that retail thinks and the way retail acts, right? This is something that we know. And so our trading is based on you acting how we expect you to act. And so, again, what do retail traders tend to do? They tend to be very euphoric at the tops and very pessimistic down at the bottoms, right? And what do your professionals do? Well, your professionals are selling into you at the tops and they're buying what you're selling at the lows, right? So distribution and accumulation. Yeah. But that's because we understand that human beings act in a certain way. Yeah, most human beings, right? What'd you say, Murray? No need to prove anything. I just used what I learned in Chris's Pivot Points Master Course and it's worked for me. I think that's proof enough. Man, pivots are fantastic. Yes. The important part for me is also stopping what I was doing before, like weed out the bad habits. Yeah, and that's we got a lot of bad habits, whatever we're doing in life, right? Again, everything I talk about in trading is in life. And if you guys stop and look at it, you will notice similarities between the way you approach relationships, your job, your business, whatever you're doing, maybe some other skill set, right? You'll notice the way that you approach those and the way you approach trading. And you'll see a lot of similarities in that. Yeah. Let me see here. Are rate cuts bearish? It depends, right? It depends. Everybody wants to say rate cuts are bearish. Well, but that's part of the story. What's going on? Usually when you look at the rate cuts are coming because there's already a recession in progress. But if there's not already a recession in progress, why would rate cuts be bearish, right? There's two ways to increase liquidity: rate cuts and printing money. And anybody that's been paying attention the last few years, especially, we've really started noticing, really the last 20 years, we've started noticing really that it's global liquidity that drives overall asset prices higher. That doesn't mean you're going to pull backs and rise along the way and some are going to do better than others. But generally speaking, an inflow of global liquidity tends to push asset prices higher, whether that's stocks or whatever else. So yeah, everybody wants to say rate cuts are bearish just as if that's all that there is to it, but it's not. What's the underlying? What's going on there? See, and that's what we go back to what I was talking about at the beginning. When we talk about, with the steepening of the curve, but yet small caps are also rallying. What does that mean? Let me see here. What'd you say there? Y'all are putting a lot of blind faith and a lot of free content. You have to look at it, test it, and then put it in your toolkit or move on from it. Yeah, exactly. You have to go in there. And the thing is, the longer that see, here's the thing. When I started, I screwed up for the first 4 years, right? I lost a lot of money. And it wasn't until I actually sat down and said, listen, I got to get serious about this. Otherwise, I need to just stop. But it took me 4 years of losing money consistently to actually do that, guys. 4 freaking years. But I made the decision that I wanted to learn to do it, that I really want to learn everything I could possibly learn about markets and what's going on there, every side of it. And so that's what I started doing. And as I learned more and more, I was able to start taking in some of the new stuff I was learning. And I was finding out, well, this is how you do this. And this is what this does. But what's that underlying? What's going on underneath that's making this happen? And if you're really serious about being a student about markets, you'll probably come through the same thing that I did with that. And you'll start figuring out, and you'll start understanding, you'll start looking deeper at what's actually going on. It won't be enough for them to simply say, listen, if it does this, then this is going to happen. But you look at that, then you look at something else, says if it does this, this will happen. You look at another thing, says if it does this, this will happen. And then you start looking at them and you go, what's the common denominator? What's going on? What's driving all these things to happen? And you start connecting dots. You start putting it together. But the reality of it is most retail traders don't make money in the markets, and they don't, not because they can't, but because they don't understand these things I'm talking about as far as the mental side of it and the way in which they approach life, the way in which they approach markets, proper risk management. These are all very, very key in order to becoming successful as a trader. They're absolutely key. You can't do it without them, which is why I talk about them week after week there. Let me see here. Let me see. Let's see here. Troy is asking, I know FedWatch Tool is almost entirely forecasting the Fed to pause next meeting, and the DXY seems to agree, but what's your thought for the 31st? Do you think we'll see a pause or rate cut? Oh, yeah, that's a good one. So we've been looking at the possibility of a rate cut, coming up August or September, this October, this kind of area, right? The end of Q3 into Q4. PCE came out today, year over year. We're down again. I think the Fed has the ability to cut into it. Will they do it? I think the chance is higher that they will than not this time around than what it's been. I'm not willing to say it's definitely going to happen or not, but I think they've got a really good chance to do so, especially with the election coming up. And that has nothing to do with the economy or anything else. That has to do with votes, right? Often we see rate cuts into the presidential election. We'll see a rate cut into that because then the president can go, oh, look, rates have dropped. Look what I've done. Even though we know the president doesn't really have an effect on that, as far as the rates go. But yeah, I think so. With all that in mind, I think, even if it's not this next one, potentially one right after, one of those two, I think we'll probably get a rate cut on that. So yeah. Let me see here. What'd you say? Clemente, what's up? I'm already applying the risk management principles successfully. And to be honest, is not that I have not heard this before, but I have never been serious about position sizing and risk management. And I have suffered the pain, and my portfolio knows it 100%. I'm telling you guys, risk management, there's a way to do it. There's rules to follow, and you back into your position sizes based off your stop loss and your entry and all this stuff. And then you look at your targets based on that. I mean, it's so, once you learn it, it makes so much more sense. It makes trading a lot more enjoyable. Because the fact is, most of us, when we go in, we just, whatever position size we want, we throw in there, regardless of even if we're using stop losses where they are. And you have to use stop losses. Don't listen to anybody who tells you don't use stop losses. Oh, I use stop losses, I lose all the time. That's because you haven't learned how to properly set up your trade. It's not because you're using a stop loss. It's because you haven't learned how to actually set up your trade properly. That's what it is. But it's imperative that you have stop losses. What happens if you don't? What happened to Alameda and FTX and all that crap? Remember Caroline? Remember that infamous interview she did where she said, well, we don't use stop losses. They were $2 billion in the hole on their trades. $2 billion, guys, in the hole because they didn't use stop losses. Oh, it's ridiculous. It's kind of crazy. So anyway, what do channels this big making lower highs and lows have to do with probability of downside continuation? Has time become more of a factor of strength? No. And so what we notice is volume continues to draw off as we continue to move lower there. Now here, we've got some highs here. We're coming up here. We're trying to keep leveled out here. And so what we're going to look for, because we've had this move up, right? And you're not always going to get, when you have an accumulation phase, what you have is you're looking down here and you're not seeing any real strong volume at the lows, right? Nobody's trying to push price down lower, right? You don't see that going on here. it's coming down here. If this was to be distribution here, what we're looking for is we're looking for this movement down, larger and larger candle spreads. We're looking for an expansion of volume, and we're not getting that, right? Here we go again. Not really getting it. We got volume right here in this point to break down below this swing low, but this is how it ended. Boom, right there. What happens when we compare this candle to this candle? Large candle spread. This is a downtrend right here, and even a downtrend of this whole thing, right? Large candle spread locally, because volume's always local, right? It's never absolute. It's always relative. But you have a good bit of volume there coming locally, and then you have a much bigger spike of volume on this. But what happens? Large demand wick shows up. So you didn't have continuation of selling. You didn't have market participation in the selling down here to send it to suggest that distribution is happening here. Instead, you finally got this bump here, and immediately was followed up with this back in your face thing right here. Very small candle spread, probably like 20 or 25% larger volume than what you had previously. Large candle spread into small candle spread, but more volume. More effort, significantly less result. Tells you demand's there. They're not trying, the market's not pushing it down. Market wants to push it up. And then you go, oh, but the volume drops off when you first start to go up. Yeah, because what happens is you get fatigue from your sellers here. They're either out or they're tired of selling. They're either out of what they can sell or they're tired of selling. So it's easier to move up and you're going to have lesser volume. Now, your volume should kick in when you're breaking out there. You're going to have something called the jump across the creek. And that'll be the breakout through this resistance up here. That'll be a large candle spread, large spike of volume. And then you'll see volume kind of increasing with that. But right here, locally, there's no reason for volume to increase. It doesn't have to. People are, the retail's scared. Retail's been selling down into the lows. Retail's still screaming at you that the top's in, right? Does that make sense? So yeah. Let me see here. Oh, let me see here. So that's just the thought about this right here. It's not just about the simple channel that's here. What's going on? What's the story with volume and price action? That's what you should be getting out of there. And again, that's what we teach in our group coaching every week, right? We have a Wyckoff session every Monday for an hour where we look at charts and we discuss them. We answer questions, and of course, we have the course there as well. But that's part of understanding how and why markets are moving the way they do. How do the professionals and the retail trade? And why do they trade the way they do? And how can we notice that on the chart? So that's what we look at. But if you don't understand it, you'll come up with smart remarks, and you sound like, honestly, to anybody that actually knows what's going on, you sound like an idiot. And I don't know why people want to do that, right? Why would you purposely go out there and act the fool? I don't get that as a personal being, right? I mean, it's almost like, what happened in your life that made you feel like that was the proper response to life? I don't get it. But anyway, my expectation is that we'll get a bit more rally up here, as I've been talking about, towards the area, and then we'll pull back, and then we'll get the big breakout. So, right here locally, this looks like 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4. That 4 pulls back, 38.2. Right there, just shy of 38.2%. That's a nice daily pin bar on that, again, on that support there, the daily pivot. And so based off this, we would, everything else aside, we would have a generic pattern target here based on the height of that pullback of 1.618, so 71,986 here. And that gets us right here at that this last lower high right here. Again, remember, structure is high, low, lower, high, lower, low. So if we break out above that lower high, this bearish market structure is now complete. It's done. It's no longer, right? So yeah, that's what we're kind of looking at there. Let me see here. Okay, let's jump in some charts here, guys, with you. Let's jump in there real quick. What do we got here? Oh, we've got Ethereum here. What's going on with Ethereum? All right. Oh, I'm sorry. This is not Ethereum. This is gold. That's what I'm looking for. Yeah. So gold, again, we talked about this being reaccumulation here. You had your spring down here, rallied up. Boom, there we go. We got the big rally up. We're just, we're just going side. We're just reaccumulating here, guys. A real big tell, and this is a very basic tell, is when you have your range like this, right? You have the range like this. Is your volume dropping off throughout the range? If it is, then that is the first general thing we look for to go, okay, that might be reaccumulation right there. Now you want to go in, lower time frames and look at specific areas within the range. But generally speaking, when we look at that, we go, okay, this is probably reaccumulation here. Let's look to get up higher here. And so again, we're still looking up here at least at 25.6430. I've got another target up here at 3,053. So for me, this movement here from April 8th, the week of April 8th of this year to now is just, it looks like it's just reaccumulation, and we're going to kind of continue pushing up higher there. So I like gold for longer. Overall, still coming up. But here's the thing: the fact is, this is reaccumulation up here, and this is 1,300 days of reaccumulation. 1,300 days, guys, from August, beginning of August of 2020, until we finally broke out over here, beginning of March of this year. So, another concept is the longer the consolidation, the bigger the breakout, right? So the longer the contraction, the bigger the expansion. Okay. Are there, in your plans, are there market situation, price action that shows up in the chart, which tells you to turn off your brain and left curve your entries? Even if they do, sometimes price action looks really clear. But here's the one thing I've learned over 30 years of doing this, okay? This year is 30 years I've been doing this. The one thing I learned is no matter how good it looks, it may not be what you think it is. Honest to God, you can get out there and go all day long and it looks like it's going to do this, and you may misread it. So I never just blindly jump in and trade or whatever. Never. There's always rhyme and reason to why I'm getting in. Always proper risk management, proper targets, depending on what time frame I'm looking at, how far I'm looking to hold it, things like that. But yeah, so it does happen. There are times when I look at it and go, oh my God, this looks absolutely perfect. And then it just isn't. It really just isn't. And I think once we learn that as traders, it helps us be more mindful of our of our trades, more mindful of our risk management, and actually using it more often. Gold is going on a big bull run soon. Now, it's already on a bull run. It's really been on a bull run since back here in October of 22. This is all up. Since that low, since the spring down here, maybe it was this one here. But since that low, we're already up. What is that? 53%. I know sometimes people look in here and they're like, oh, but it's not a bull run until whatever. Like some people are saying that Bitcoin isn't even in a bull run yet. No, Bitcoin's been in a bull run since that $15,000, $16,000 bear market low. It's gone nothing but up since then. That is a bull market. That is quite literally the easy definition of a bull market. Simple definition. So, we have, and we've broken out, we've broken out above the all-time high, right? So, and that's the same thing we've done with Bitcoin, even though it's just a bit higher, a few $1,000s higher there, 5,000, whatever. But still, again, on Bitcoin, from the swing low, from the bear market low to where we are, if we look at this, right? So from down here to that high, 307, almost 375%. New all-time high, all up only, bull market, right? Now, I mean, if we look at it, we go at the real definitions. The definitions are a 20% rally over the course of 2 months at least. You look at something like that. But really, we've been in bull market, guys, since the low. We continue, we've broken out through the all-time high when we look there at gold or Bitcoin, okay? Now, there's the question. Crusher, I like this question. Do you think Bitcoin is going to be a left translated cycle or right translated? Well, I wouldn't even say right translated. I think at this point, well, Okay, yeah, no. So the way I was looking at it earlier this year was, okay, could potentially be left translated, but I was looking for higher for longer. I was looking for something more akin to what happened in 2012 in that bull run there, which had like this double pump kind of thing going on. And so I'm still thinking that's probably where we're going to be. I don't think we're left translated. I think Bob Lucas feels the same way as I do about that. I know he was looking at, probably left translated, but the fact that we've spent so long sideways here, the 7 months here, and then now we've been 4+ months here. That I think that pretty much all but takes out the idea of the left translated cycle. So I think we continue rallying into 2025, somewhere into the year kind of thing, at least as we do this. So yeah. Let me see here real quick. Let's keep looking at more of these charts. Silver. Let's look at silver real quick here too. Here's silver. Whoops. Oh, let me see here. Yeah. So again, silver, we've been watching the follow, the breakout here. We did well. We've got a pullback. This pullback may be complete, or it's looking pretty good. It's likely being complete. As you can see, 3 waves here. It looks like A, B, C here. So it looks like a flat correction potentially. Let me see how far that rallies up. No, not a flat correction. It's not 90%. Let me see here. 1, 2, 3, 4, 5. Yeah, okay. So we can have 5 here, A, B, and then C is a flat here. And then 1, 2, 3, 4, 5. So I think, this may be, the pullback may be complete here. As you can see on the daily, RSI almost reset and oversold. Stoke RSI bottomed out and oversold. So if it's not, it's probably pretty close to being done. But this will give us a target based on this height here of at least 36.37 on that there. But we're going to need a breakout above this swing high right here. This would be the wave B, 32.015. Yeah, so here it is. Yeah. Is part of this rally up off this swing low down here, this September of 22, 3 up here at $40.99, which would give us a wave 5 up here at around $48. Now that can overextend as we continue to go up higher here, but locally here, looking for this rally up and breakout above $32 there to get us the next target, 36.37, potentially leading the way up there to almost $41 up there. Let me see here. What else we got real quick here? I wanted to go over RTY. Again, this was the one, right? So last, right here, October, the end of October, last few weeks of October there of 23. That's where I said, listen, this looks like accumulation based on what we're looking at price action and volume, especially on this downtrend here. I said, look for a little spring there. And if we can get a good candle afterward, we should be long. That'll be a spring most likely. And we're going to head up to new all-time highs. As I said, we're up about 40% so far getting up here. I've still got wave 5 in progress, wave 5 of 1 up here to around 23.39. And that's based on the height here of wave 4. Actually, let me see here. Let me make sure I've updated that the way I needed to. There. Nope, a little bit higher target. Sorry, guys. It's going to be 23.7860 now. And that'll take us just shy of the all-time high over here at 24.60 and 80 cents. So we should get a 5, and then we should get a wave 2 pullback down here toward this initial target is going to be the 50% level, right around 1974.5, right at this low volume node, weekly pivot, all that kind of stuff. So we should, once we get up around this area, and this could push out higher, but our target based on the height here, which is what we start out with, gives us at least that, generally speaking. And then we'll look for the pullback again down here toward It's 1975 area. And then boom, that wave 3 will be the big impulsive breakout above that all-time high, right? Again, it's that idea of a 1, of a 1, 2, 3. The 3 is the big breakout. That's the same thing here on Bitcoin, right? 1, 2, 3 will be the big breakout. The same thing, just applied to a different chart. It's usually what we see. Here's Ethereum real quick here. Again, nothing bearish on Ethereum at all. We were talking about the bottom back here in June of 23. And then we had this kind of consolidation, these lower or these higher lows up toward this resistance. We got the breakout, consolidation on top, and then the rally up off there. We're just, again, doing some sideways consolidation here. And so right now, we want to see this kind of continue to break out here. But again, I've got targets of 51.70 and then 63.96 on this rally up here. Not that it's the end all be all, it's the high, but right now those are my next targets I'm looking at on these larger time frames. But back here is where I was talking about we should be long, right? What was this? This was this was a low of basically $880. Again, looking at that as being the reason we should be long right here at that low volume node. It was beautiful. Came back here, never really did much other than kind of pull back to this area right here. Or these candles split here, and then you have this wick coming down, right? That's all we did. Pull right into this area. That's all we did. And then we just kind of continued up there. So, again, nothing's changing on that. Still looking for higher overall. Let me see here. This, again, we could get potentially more consolidation here. I wouldn't even be, honestly, I wouldn't be like feeling bad at all if we did get a bit of a breakdown here to kind of test this range down here from 21.5 to 2,400. It doesn't look like it at the moment, though. You can see that the weekly is not even at neutral yet. It's been rallying up on the Stochastic RSI. RSI got rejected just prior to the SMA, but it's above neutral. It's on the bullish side of neutral, so looking for that to curl back up and continue heading higher there. DXY, again, the question was earlier, how do you win over trust, right? Well, those of you who have been following me know that down here, I was talking about this being the bottom, and I gave the 114 to 115 target here, right? You guys, those of you that have been around, you remember that, right? Because it was me and Hank talking a lot, and Hank was talking about how he thought it was going to continue going lower. I said, no, I think that's probably the low right there. And so we had the 114, 115 target. As you can see, it did hit 114.425, so 114.5 almost. And then off that, I said we were going to have a first target of that 100 area, which we did. And so we've just been sideways here since we hit this low right here, this in February of 23 at 100. We've just been sideways, guys. That's all we've been doing. But I do believe this is potentially a 1 and a 2, and we'll head lower down here, and we'll continue to fall down lower. But for the time being right now, we are just kind of sitting here in this range. Kind of sitting here. Right now, you can see we've got 3 waves up. So if, big picture here on the daily, if we're to drop below this swing low here, by the way, this is not the DXY index. This is the, as you can see here, DX1 exclamation point. It is the futures market for the DXY, which is traded on the R.I.S.K exchange. That's why we have volume here. But yeah, so, big picture here, we're looking for a drop below this swing low right here at 102.3 on this thing here, right? That's where we had the gap right over there. We got the support right there as well. We drop through that. That should indicate we're going to break down further here, continue down with that. Let me see here. 3 quick charts here. We got the NASDAQ, we have the SPY, and we have the Dow Jones. Look at the difference in the pullbacks and the movements here. Let me kind of set this up a little bit. Why are there differences? Because they're 3 different indexes, guys. Remember, your Dow Jones is your more what do you call it? More spread out, right? It has components from different sectors, right? So it's not concentrated. Your S&P is somewhat concentrated in tech. No, nowhere near as heavy as NASDAQ, but nowhere near as balanced as, say, the Dow. So when we look at this, we go, well, why is this doing this? Because tech is down. That's why your NASDAQ took a bigger hit. It's come down like this. It hasn't bounced as far, right? NASDAQ, 3 waves down. We're bouncing up. Dow, 3 waves down, bouncing up. We've broken out above that B wave. We should be breaking out higher, guys. So quick target here. By the way, y'all know I continue to look for 50,000 plus for Dow. So that's something I've been talking about for a few years here. I believe we'll still get it. Based off this pullback here, that gives us a target of 42,380 on the Dow. SPY, again, we're going to look to break out above this swing high here at 556.74. If we can get that based on the pullback, the height of the pullback, 568.91 becomes the target. There we go. And then, this looks like 5 waves down. But if we look in a little closer, it could be 1, 2, and then 1, 2, 3, 4, 5. So because of that, without wasting time, because I don't have a whole lot of time, we're just going to assume it's 3 at that point, which means we'll need a breakout above that swing high right there at 20, whatever that is, 25.85 and 0.17. And if we can get that, that gives us a target of 21.814.10. By the way, S&P, I do have an S&P chart here. These are the minis on the S&P. Again, same idea, 3 waves back, right? So if we're getting that breakout above this wave right here on this futures at 56.29 3/4, that gives us a 59.0150 target. Again, I'm still looking for a lot higher overall for the S&P. I wouldn't be surprised to see the S&P hit 9 or 10,000. Okay. But the Dow does look amazing today. Yes, it really does. It's a nice rally. We had a pump and a pullback yesterday that just cleared the way. As you can see, we're getting a pump today. And usually you don't get these kind of nice pumps like this into the weekend, right? Stocks, the guys, you have to understand, stocks and Forex, most of these guys are already, if they're not taking half a day on Friday, they're mentally already checked out. That's the way that the TradFi works. And so they're already mentally traded out for the weekend. So when you can see these kind of things happening, it's pretty great to watch. It's pretty great to be a part of. But yeah, looks good. Sol has just been absolutely, man, I haven't found anybody yet that bought down here at around $9 when I said to buy it and has held it all the way up here. Man, it would be like, probably around 2250%. 2250%. It's been a great return on it. Absolutely fantastic. And so we got a, descending resistance here. We got an impulsive breakout, large candle spread, decently large volume. Looks good. Based on the height of this pullback here, we've got a target of 301. As I've been saying, we should at least hit 410 overall. I believe overall there. You can see that hitting the 301 though gets us a new all-time high on there. But again, we had this pin bar on support here, led the way up. Pull back here again. We got a pin bar here on that support area, rallied up, pulled back to it, rallied up once more. So I do believe we're heading out higher, going up there with Sol. So good times with Sol. Let me see here. FTM, USDT. Yeah, it's been a while since I looked at FTM. Oh, come on, catch up. What do we got here? Come on. Catch up, TradingView. TradingView's like, stop. You're opening too many tabs. It's probably my computer is saying that. I ain't going to tell you guys how many tabs I got open between the browser and the TradingView app here. Live by the tab, die by the tab. Right? Any of y'all feel that? Any of y'all do that? You have all those tabs open, like 100 tabs on your on trading or on your browsers, multiple browser windows open. Diego, have a great day, buddy. Let me see here. There we go. I don't know why it's starting us so low at the end of the bottom of the thing there. Okay, so we got the continuation back here. We pulled back into it. So what's going on here? Let's see. So this can't be diagonal here. You know what? It's just ABCs. Looks like a diagonal. So here, actually, let me zoom out here a little bit more. By the way, I love, once again, pin bar candle, actually a hammer there, on support on the S1 pivot. Man, it's beautiful. That's what we want to see. And at that time, we dipped down and oversold here on RSI. Stoch RSI was oversold. A lot of volume coming in on that with that large lower demand wick. That was your signal to buy. Again, we talked about what I was talking about at the beginning of the show here about looking for confluence of events that are happening at the same time to make it a higher probability trade. And those are the ones you want to take. Let me see here. So jump out of the weekly here. By the way, that's also on the weekly pivot. Broke out above it, pulled back, retest. Just retested here. Should want to go higher. So that'll give us a target of 25.58. 2.558. Which normally, again, as I tell you guys, normally we expect there to be 5 waves up right around the previous swing high. First 5 waves up. And that gets us there. So instead of the bigger targets there, this does look like a diagonal. What we'll need to see is a breakout above that swing high right there. So this looks like it's probably a WXY rather than an ABC correction. Oh, I hit the wrong one there. Again, guys, if you want to learn how to do all this stuff, join us at our Texas West Capital, our group coaching. You can get in there and you will learn how to do all of this yourself as well. You've seen some of our students talking here and telling you what they think. You feel free to ask them. They'll tell you right away what their experience is. And, then you don't have to believe me. I understand. I'm saying things. I'm the guy that owns the company. I understand that, but 09657. But, you can talk to them, or I've got a link under the YouTube video to testimonials page, I guess, where I've just, linked a whole bunch of testimonials that are usually on X and whatever that you can check as well. Feel free to do that. So we're looking for a breakout above 09657 to add confidence to this count and get us that, toward that wave 5 target up there at 2.5580. Now, again, that's just the target based on the height of wave 4. Price could go higher. It doesn't have to stop there, but just based on that, it gives us our initial target to begin with. And as price action plays out, we can kind of count waves and look for more. But yeah, it looks like ABC. And then right here looks like well, I don't know, that's 5. Yeah, that's 5. Okay. ABC here as well. So we get an ABC up for wave 5 to give us that leading diagonal on there. Let me kind of catch up with you guys here. Yeah, hit the like button if you would, please. I would appreciate that. It just kind of gets this content out there, to other people who may not have come across me yet. So if, again, guys, if you're following, and you get benefit out of this, take half a second to do it. Hit the like, subscribe to the channel, follow me on Twitter or wherever else. Leave a comment. But if you're just a nasty person, you leave just like a rude comment just to be rude. I'm going to assume you were raised in a barn and your parents didn't teach you any manners, and I'll probably just delete you. Or I don't usually waste time with comments like that. But legitimate comments, and it doesn't mean you have to agree with me. Oh my God, I don't know why it's so hard for people to have a different idea of what may be going on, and not just be able to be a decent human being and speak it that way. It always blows my mind. People are like that. But yeah. Mike Lamb, he says, join our cult. It's the best cult in the world. Oh my gosh. You're so funny, Mike. But anyway, let me see here real quick here. Frank, you said your mom does that every time you visit. You have to close about 200 tabs. I do too, man. I've always got that. I'm going to read that later. Oh man. Yeah, my PCs I keep pretty updated because I do all that, and then I also use the TradingView app. And this is the TradingView app that you're seeing these charts on. And at first, it was really a resource intensive, a resource hog. It still takes quite a bit, but they've done a lot to tone that down over the last year or so, which has been great. But yeah, I'll have like 30 or 40 charts open at any one time here until it just finally pukes out on me, and then I have to restart or something. Let me see here. You had VET at a pullback to 2269, but it flushed down to 2. Does that reset the wave count? Let me check what you're talking about. So I go through so many charts, I don't always remember them. Let's see here. But as I said at the beginning, guys, your mindset, the way you view yourself, the way you view life, it is the biggest influence on how you do in life or what you get out of life, how happy you are or aren't with life. It really is. And I know there's a lot of people out there go, oh, it's just guru stuff, whatever. It's not, guys. I'm telling you, it's real. I didn't start out with money. My dad was Navy. He spent 22 years in the Navy. That was me growing up. Moved from country to country every few years. Lived in places like Okinawa and Japan and Hawaii and all those things, right? But it wasn't like, hey, here's $100,000 to get you started or anything. Matter of fact, he didn't even buy my first car. I had to buy my own first car, right? So everything that I have today, 100% has to do with my attitude, with the way I look at life. I could never have done what I've done with trading or with the businesses I'm involved in, if I didn't have that outlook that I have, and that understanding of life, and the understanding of how you view it is how things do it, right? So, yeah. Anyway, live your life, Frank says. That's right, Mom. That's exactly right. Live your life. That's right. All right, let's zoom out here a little bit. So real quick, the first thing, this is the S1 pivot. Again, pin bar at that S1 pivot support. Yeah, and I think, we had some bullish divergence leading into it as well. Yeah, that should have been your long right there. I don't think it changes anything. It's the 70.5 retracement, almost exactly. Those of you that know me know that is my favorite retracement level. So even though Elliott Wave says 61.8, the golden pocket, most often we look for pullbacks to the 50% or the 71 or the 70.5%. Okay. No bull trap, Mike. I don't believe so. Let me see here. So yeah, so I'm looking at this again. We got a 70.5 pullback, which is absolutely fantastic. It looks like 1, 2, 3, 4 here. You can see on the daily Stoke RSI, almost bottom out and oversold. It's reset pretty well into oversold. RSI itself rallying back up toward neutral here. This looks like ABC, ABC. So looks like a 4-wave pullback. Let me get this out of the way here now. Let's see, that pullback is how far? Yeah, it's a 50% pull. Oh, no, sorry. One blip on there. just beyond a 50% pullback. Again, getting a pin bar right down there. That rally, a little bit of volume on that. So I think we go up from here. We need a breakout above this right here to add confidence to the count. What is that there? That is 03174. And so again, yeah, I think it looks like a 1, 2, 3, 4. And so we're gonna get a 5 out of that. Let's see, I think we'll do. Just go with that right there. And so based off the height here, again, based off the height of wave 4, we'll take the 1618 extension. Gives us a probable target of 03946, which just takes up into all this kind of sideways movement here. Let me see. See, I don't think this is 1, 2, 3, 4, 5 here. Let's see here if that's right there. It's larger than it could be. Be a short wave 3 though, wouldn't it? Yeah, see, that's a short wave 3. Let me zoom in a little bit here before we get done with this. Zoom in here a little bit. Actually, it looks like a 1 there. It looks like A, B, 1, 2, 3. Maybe not. Nope, up here. It's probably like a 1, 2 down here, 3, 4, 5. And then W, X, Y. But anyway, we've got 1, 2, 5, 3, 4, 5. Yeah, I mean, that looks right. It looks 1, 2, 3, 4, 5. So 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Yeah. So, I mean, that's what it looks like. It looks like we've got that here. Again, we want the breakout above 0.03174 to add confidence to the count. That gives us a wave 5 target. Up here at 0.03946. Larger degree, wave 3 here. Has a target up here of around 20 cents. Right there, 20 cents. And it'll give us 5 waves up just around the previous swing high. So, you know, again, what we would normally look for. So that's where I'm sitting on that. That's what I think we got going on there based on the chart. Just need to get that rally up through 0.03174. Do that in there, okay? I don't know what you mean about wave 4 being the largest LE wave 6. Okay, see, man, you know, so here's the thing, guys. See what I mean? I get out here, I try to be nice to people that are rude and disrespectful and just jerks. And this is what I get. They sit here, continue to come back like jerks. So what I'm going to do is I'm going to go ahead and ban this guy because I'm tired of him. So ban and delete comments. I mean, you know, you can't win for losing, guys. I'm too nice. You see what I'm saying? I thought maybe by talking with him and letting him know, hey, listen, he's just misunderstanding, whatever. But no, he wants to continue being a jerk. People like that, raised in barns without manners, clearly. It's not worth it, guys. Let's see here. So anyway, he's done. He's done. I'm tired of it. Sarang, you're welcome, man. The Jupe USDT chart. Oh, man, I'm late here. Yeah, let me look at that real quick, and then I'll be done here. I don't even have one. Okay. Well, I guess I'll make one. But see, you can't be a nice guy in this world a lot of times, guys. Because people like that will just use all your energy. Worthless waste of human space. I'll tell you what, honestly, you can't even, it's taking up oxygen. The rest of us could use, right? But it's sad. Thanks for showing the fly out of the room. Sorry that I put you guys through that, JoJo and everybody. I really thought maybe he'd listen a little bit, but just wanted to continue being rude. No reason to deal with that anymore. It's unfortunate, but again, how do you? Again, the question at the beginning: how do you build confidence or trust? With people that don't know you, and hopefully by trying to help people who are still rude to you anyway, right? I don't know. Life's funny. Be careful the people that you allow to come into your life, guys. They're either going to drain you or they're going to charge you. Okay, and charge up like in a good way. All right, not like charge you money. But stay away from the ones that drain you. It's not worth it. Everybody feels like they deserve to be heard because social media gives them a chance to be heard. I promise you guys. Not one of y'all, not me, deserve to be heard just because we can be heard, just because we have a platform to do it. Our opinions about things don't matter just because we can speak about them to a group of people. All right. Let's see. This looks like a 1-2 and then a 1-2. 1, 2, 3, 4, 5. All right. I mean, so this is 3 waves back here. It looks like. So if I'm looking at this, I'm going to look at this as a 1 and this as a 2. We're going to ignore this because this was the first day. This was just all, just coming into the market and whatever. We're going to ignore that. We're going to look at that first pullback there as way at the beginning of wave 1. 1, 2, 3, 4, 5. Yeah. And then it looks like maybe like an ABC and then an ABC. So a WXY correction. We'll just do it like that. And we'll say, like I said, we'll say WXY here. All right. This pullback is how far? Look at that, almost perfectly at the 70.5, which is right where this line I drew was actually. That's pretty good. So before we look about low, I'm not going to worry about higher at the moment here, how high this could potentially go. I don't think. Well, no, I guess I can probably do it. I don't know. Just want to kind of look locally here. I don't have a lot of time. I mean, this gives us the 1618 up here at around 6.66, wave 5 up here around $11.61 potentially. But locally, we want to break out above wave X, which is 1.3214 to add confidence to that larger count. Here, this looks like 1, 2. This looks like 1, 2, 3, 4, 5. So for right now, without, again, because I just really don't have time, I got to get out of here. But a real quick draw here. This looks like we're on wave 5 of 3 here. They're around 1.214. Which would be, again, wave 5 of 3. Wave 4 should pull back toward the previous wave 4 here then. Yeah, see 38.2 or the 50%, so right back there. Around 96 cents. And then wave 5 up there, minimum expected target up here at around 1.4, $1.40. So we'll see if we can get that again. Look for the rally up, the pull back, and the rally up higher. And then that'll be, wave 1 here, and wave 2 should pull back down here toward this wave 4's area. And then you get your 3 out. So we'll look for that. Let's see here. All right, guys. Well, that's going to do it there. So hopefully I gave you a lot of information. Hopefully, that you're seeing I'm not just some whatever out there, that I really do actually want you guys to learn. Even if you don't join us, I would love for you to join us. I think what we do is absolutely fantastic and really put you ahead. But here's the thing, guys. If you really aren't ready and open-minded to learn, because I'm going to teach things that is going to go against what you may have heard online, but they work. I show it week after week here that they work for 7 years now, 7.5 years, 7 years almost, September. But yeah, if you're not ready for that, don't waste your money. It'll just be a waste of money. Okay. You'll come in, you'll spend your money and you won't try, and you'll be miserable. Don't do that. But if you're serious about learning, if you really want to understand, not just go, well, how do I trade it, but really understand why and how the market's moving. How do we read that? How can we understand that so we can have, again, guys, I've been the guys who've been calling all these bottoms, right? I called Bitcoin, Ethereum, Square, PayPal, so many of them over the last few years, right? There's a way to do it, and you can learn that as well. But you have to be open and ready to actually take it in and learn it. But it's not just with me, it's with anybody else, guys. Okay? Don't waste time with anybody else, buying their course or whatever if you're not ready to put your all into it. You have to believe you can be successful, because when you believe that you can be successful at something, then you do the things you need to do to be successful at them, right? I can't jump in your head and tell you, boy, buy this here, sell that there, or whatever, right? I can't do that. All I can do is explain to you how and why things work the way they do. I can tell you, here's how you approach the market. It's another big thing we do at TWC. We don't just teach you how the mechanics of it. We teach you how do you actually approach the market. And because that's going to make a big difference with whatever trading system or style that you're using, how you approach the market. Are you approaching the correct way at that time? But I can't do that for you. All I can do is give you the information and teach you and answer your questions and continue to remind you and to say the same important things over and over again until you're open to hearing them. And then at that point, it's your time to teach yourself, to convince yourself to do those things and actually do them. All right. By the way, we've also got something else we're doing. If you want to just get a taste of what we do, I opened up this new Liquidity Impulse Trading System, and you can get that with our risk management course and a few other things. The link is underneath the YouTube video here. It's also posted on my Twitter account. A lot less, expensive than what our group coaching is. But I'll tell you right now, the group coaching, I charge a lot less for it than what it's actually worth. If you're serious about it, get there and do it. It will change your life as a trader. There's no way it can't. Because we hit everything nobody else does, and we do it all when we talk about it, right? But if you want just a system that works with proper risk management, stuff like that, you can jump on that, and we'd love to have you in there with that as well. Okay. All right, guys. As always, remember, the only thing you control is how much you lose. I really appreciate you guys taking some time to spend with me today. I didn't intend to go into the whole explanations of how and, trading basically here, educational stuff. But, I thought maybe by speaking out a bit more about it and helping Crusher see that he was acting the fool at the beginning, it helped. But, well, as you saw, it didn't really help, did it? But y'all got the benefit of that, right? Y'all learned some things here, hopefully, that are going to help you in your day-to-day trading, whether you join TWC or not. All I ask, is if you would please, share the link, leave a comment, hit the like button, subscribe to the channel, follow me, those kind of things. Because unfortunately, that's, this the algorithms. It's the only way that it gets out there to other people. All right. All right. As always, I hope you guys have an amazing weekend. Y'all trade safe. And man, if you're in TWC, I'll be talking to you guys a little bit later. If not, hopefully I'll see you guys talking to me on Twitter or something, or even here in the videos. Take care, everybody.